So can you help us recap, based on your expertise, on what has been lacking in previous development financing approaches or attempts in Ghana?
No, thank you, Jonas. And that is really the million dollar question. And as you know, the history of development banks in this country is I think about 4-0 at the moment, and none of them have survived in in the in the way they were intended to this day. So, what has made us different? And I think the two important structural um, things that were put in place that ensures that we take a different approach. The first one was really by the vision of the president in terms of setting us up not through a presidential edict, but through the legislative instruments that we have today. So we were set up initially as a company under the Registrar General. And then at the same time, the stakeholders, which included the central bank, put together an Act 1032, to regulate development banks as a whole and as an umbrella legislative instrument. We then had to go and apply to the central bank to meet the requirements of the Act. And this was very, very strenuous, difficult, and strict because we wanted to ensure that we were set up with the highest standards. So the board was set up through competitive recruitment, monitored by international audit firm, PwC. The management went through the same process. We all had to go through the fit and proper exams and examination by the central bank. The policies, of which we have about nearly 60 policies of which we run the bank, were again went through the central bank approval, systems, technology, etc. It was a very, very tough process, but it was a welcome process because it really established the bank on a very solid footing. And so the setup of the bank and the gestation of the bank went through what we would call best of class principles. The second aspect of the way the bank was set up, which is unique, is that we're set up as a wholesale bank, which means that we, as Development Bank Ghana, do not have direct access to the end borrower. We have to work in partnership, in collaboration with our partner financial institutions, CalBank, CBG, ABSA, Zenith, EcoBank, etc. We have about 10 commercial banks at the moment, and we also have Savings and Loans, Sinapi, Advanced International, Opportunity International also. And we're building up a panel or a brotherhood, I would say, of partner financial institutions. And what does that do? It really buffers Development Bank Ghana from the direct intervention with the end borrower, and ensures that we share the responsibilities. We provide liquidity to the partner financial institution. The partner financial institution takes the credit risk, and it sits on their book. And so they have to ensure that the deals that they put on their books are bankable, because otherwise they have no other recourse. And so by ensuring that the SMEs, even with our liquidity, have to go through that stringent process of ensuring that they're creditworthy, is essential for building sustainable prosperity, long-term prosperity. Yes, we are stress partners. Yes, we provide loans that are a little lower than the market. Yes, we go out of our way to help reduce the risk of the environment at the moment, and we work in capacity building, all these other areas. But the only route that we believe to long-term prosperity is making sure that we have strong, resilient private sector. And that is by making sure that for every loan that we give, we encourage our PFIs to ensure that there's an exit. There's an exit from concession, there's an exit from help and grants, there's an exit to the market where they can thrive without needing our help. And then we move on to other sectors that need our help. Thank you.
So we know that, yeah, a lot of the DBG is coming to is filling a gap that has existed in terms of finances of SMEs. Are there particular sectors or particular areas that you are looking, even though you are not dealing directly with the lenders or SMEs? Are there specific sectors or businesses in certain sectors that you believe or encourage your financing to support?
No, absolutely. We are in four sectors: agriculture, which is our main sector, manufacturing, ICT, and what we call high value. High value examples are tourism, etc. And why these sectors? These are the sectors that we believe are transformational and where we are most needed. The ICT area, as you probably know, is the fastest growing area in terms of jobs, and particularly in terms of our youth. Agriculture, again, is important in terms of food security and ensuring that we can bring in the largest number of jobs and also at the same time protect our country in many ways, not just in terms of foreign exchange, depreciation, and other ways. So these are the four sectors that were chosen by our stakeholders, and those are the four sectors that we focus on, particularly with our PFIs. And there we provide, as you quite rightly said, not just our core mandate, which is to provide long-term financing in local currency. Longer than 5 years in this country, less than 10% of the loans are longer than 5 years. So we are there to provide that long-term financing, which is essential for growth. But to your point, and you're correct, it must be at the right price, and it must be available, and we must make sure that it's available to the right borrowers who can then use that to actually grow. Without long-term financing, our growth prospects are nil. Yeah.
Then the next one, I find it interesting, the high value area, which talks of tourism and the others, looks like traditionally it's been areas that have not really been, it's been difficult for people in those sectors to access financing. But then let's look at how you are hoping to navigate the challenges of economic volatility, market fluctuations while fulfilling your mandate, because like many other financial institutions in the country, that has been one of the biggest challenges, the volatilities and the fluctuations. How are you hoping to navigate that situation and still fulfill your mandate?
That is the journey we're on at the moment. And it's difficult. It's difficult because as a development bank, providing long-term CD financing at affordable rates, you can imagine that we're taking the most risk because of the maturity, and at the same time, making sure that our margins that we take are very low. Now you can see that for a commercial bank, that is the exact opposite. So where it's the most riskiest, where there's the most stress, is where by our mandate we are supposed to operate. And there's our mandate is based on what we call ADOA, additionality and development outcomes. And this is a very important principle because it means that as a development bank, we do not go into areas that are doing well. We do not go into areas where they have enough liquidity, they have enough loans, and everything's going well. We have to go into areas, as you said, primary agriculture, etc., where again there's the most risk. We also have to act at times of stress because we are natural stress partners. So in times of extreme volatility that you mentioned, not just the currency, but high interest rates, high inflation, that is when we are most needed. And as a stress partner, we cannot shy away from that challenge. So we have to act, but we have to act on the basis that we want to be here for the next 10 years. So we only work to the extent, or we can only contribute to the extent that we have funds and we have retained earnings that we can use. So one example, in agriculture, we put together a program that for 500 million Ghana cedis, we provide loans to our PFIs 500 basis points below the market. Now that is the extent to which I can help. I wish I could do it for 3 billion, 5 billion. But I also have to remember that my own balance sheet is important. So it's always that balance. But that is a balance, and that is a tightrope that all development banks walk between impact and financial sustainability. And those are difficult decisions that we have to make every day, particularly in an environment of that volatility. And we have to make sure that people understand the narrative, that we can only help to the extent of our pocket. Because we cannot end up the way other development banks have ended up. It's a difficult decision that we make every single day. Yeah, thank you.
I think you kind of started answering the next question, which was looking at your tax requires a sound capital base and then a well-managed risk appetite. Of course, you want to embrace a lot of risk, but then also, like you said, you're looking at your capital base. So, but where are you at the moment in terms of that balance? What does it look like? Do you feel you are taking on too many risks already, that you are now at a point where you're slowing down, or you feel there is still room for you to push a little more?
There's always room. There's always the ability to do more. But you have to be different. You have to be inventive, right? We cannot accept the status quo and say, because it's risky, we cannot do it. We have to find ways to be able to execute our mandate, ways that may not be conventional. Now, I'll give you one example. One of our natural attributes as a development bank is that we're a super connector or a super convener. And what does that mean? It means that we have a very close relationship and a very close working relationship with all the banks. And every day that number increases. We also have an equally close relationship with the SMEs and the private sector. And that's not just because we cannot lend direct to them, but because we provide technical assistance, we help them take the loans, we help them work through the loans, we help them accept the loans and grow with the loans. So we have that. And then because our key stakeholder is government, we also have a very strong relationship with government. So one of the things that we're doing, which has proved, I believe, a legacy that we need to build on and others will build on, is that as a super connector, a super convener, we are getting banks, private sector, and government to speak the same language. And one of the initiatives that's set up by the Minister of Finance was a mutual prosperity partnerships. And this is not just a token shop. It's meeting with private sector at this threesome level: banks, government, and private sector, and coming out with policies and initiatives that is helping change the ecosystem and the environment. And already there have been initiatives with the Chinese private sector, the German private sector, and that work is continuing. But these are just examples of our role as a super connector. Already we have another initiative led by the central bank. We're doing some great work in terms of bringing together the data from banks, the data from SMEs, and the data from government to be able to make informed decisions. And again, Development Bank Ghana is at the center of that, working together with the Monetary Authority of Singapore and the Central Bank of Ghana to build what we call GIFI, the Ghana Integrated Financial Ecosystem. So our role in terms of de-risking the environment is actually far more important than becoming the biggest lender in the country. Thank you.
Can you shed some light on the situation or instance where the commercial banks, perhaps those who are not already your partners, will not feel that DBG is like a competitor rather than like a partner to them? I'm not sure how the space will operate, but I feel that before DBG, they were offering loans to SMEs. Some have unique packages for SMEs. Now we have DBG that is offering much better conditions, sometimes through some of these same banks. How is this role? Is this role not more of competitive than complementary? If maybe you can shed some light on how that works.
No, that's a really good question. Now, the answer is straightforward and simple. DBG is not allowed to go directly to the private sector. I have to go through in partnership with and in collaboration with my PFIs. I provide badly needed liquidity. They make the decision without any moral suasion from me about whether to take this borrower, lend to that borrower, or lend to the other borrower. So in that respect, there's no competition. All we're doing is amplifying and working together. And again, I can't overemphasize the importance of that collaboration. I do not set, like other development agencies, you must lend at 10%. No, because I'm thinking of the long term. And I offer long-term lending, which is currently not available, in local currency at maybe 100, 200 basis points than the implied yield curve. And you also have to remember that we're talking about a deficit of about, in manufacturing alone, excluding trade, something around over 150 billion. There's room for everybody. Alone, I'm only a drop in the ocean. Together with the banks, changing mindsets, coming together, building businesses that are profitable in the long term, we have a chance. Thank you.
Okay, so let's now talk about, I know a lot of what you're doing is premised significantly on the success of the KfW in Germany. What are some of the uniqueness of the KfW story that is inspiring your gallant steps in Ghana?
KfW has really been a fantastic partner. And I would say it's not just due to the size of the funds that they've given us, but the diversity and the different ways in which they've supported us. So just to recap, our first loans came from KfW with, of course, World Bank and AFDB. But that was a loan direct to DBG, not through Ghana government. Very important, because that sets a signal that we can be trusted by a key international partner. And then they provided 20 million euros for us to build a subsidiary, which is a credit risk subsidiary. Because remember, we said the PFIs are taking all the credit risk. This subsidiary allows them to buy insurance and guarantees regarding some of their risk. And then they're speaking to us now, and we hope to close this year on a climate-based fund, which is part of our national development contributions. But it's important again because they're allowing us to build new pathways, all coming together to support the private sector. And then we're also talking about an economic research response initiative, again, to support some of the things that we already are doing and to amplify that. So that just tells you about the way that KFW work and how they are Catholic in their approach. They're pragmatic, but they're also very, very strict in terms of governance and the way in which we operate. And I think what that does is that it creates best practice, world-class institution, but then also is pragmatic enough to say, it's not about being bureaucratic. It's about helping the private sector. It's about fostering a competitive growth. So I want to build something that looks like that. That has best-in-class governance, strong ALCO, asset liability management. Financial sustainability is primary, but at the same time flexible enough to act when there's stress and flexible enough to say, this is where we are needed, let's go. And I think we're doing that. So when there were floods in the Southern Volta, we were able to restructure some of the loans that PFIs had made to farmers in that area. Those are the kind of things that, to me, is what a development bank is about. One of our earliest loans was to the tourism sector, just in the peak of COVID, when the many hotels were on their knees. And through two of our PFIs, Cal Bank and CBG, we supported 5 hotels. And now, they don't need our money anymore. That to me is a success. At the time, they were on their knees, and now it's one of the best things that the 2 banks did from a credit perspective. And those are the kind of success stories that make it important for a development bank to exist. And I hope people feel that Ghana will be a poorer place without Development Bank Ghana. Thank you.
Right. So we would conclude by getting an understanding of some of the highlights for you in terms of achievement that the DBG has chalked since its establishment. If you have maybe some data or statistics, that would be great to know some of the things that you've done since it's been established.
Well, we mentioned a couple of them. I think in terms of the totality of loans, we lent about $1 billion CDs, and as I said, we're on a run rate to be about $3 billion this time next year. But what I think really is warms my heart and makes us feel that we're doing our mandate is in terms of women and children. And 16% of women have been total beneficiaries of our loans. Women-led businesses is probably about 178 million. And I think, supporting those who don't have a natural advantage. I guess anybody who's not a man, it's something that we're here to do, and I'm particularly pleased about that. Yeah, thank you.
Um, what would you or what are you doing now to expand your capital base so that you are able to meet the need of more people or to expand? You talked about the target of hopefully doing about 3 billion next year. How are you ensuring that you raise enough capital to be able to do that and keep expanding?
Well, you're correct. We have to raise more capital, right? And we raise more capital on the basis that we have a good track record. And our monitoring and evaluation of the loans that we've given through our PFIs show impact, show jobs, and show that we're making a positive change. And I think if we continue to do more of the same, we should be okay. You have to remember that KFW have automatic replenishment from their government. Because of their role as stress partners, because of their role as transformational agents. We are not in the same situation where we have any guaranteed replenishment. So we have to keep on proving ourselves until we can structure that kind of arrangement. And I think it's important as we continue to build our development bank, that if the development bank meets its requirements and it's doing its job, together with our development partners, we look to help in the capital raising to ensure that we continue to do more of the same. But we have to prove ourselves, and that's our job. And our development partners are very supportive of the work we've done today. And so it's a very boring answer, but it's something that as a nation we need to think about. Just do your work. Do it well, do it efficiently, and you'll be rewarded. There's a Bible verse somewhere about this, but I can't remember it. Okay. Thank you.
All right. So I think yesterday in the earlier discussion, I understand that you have GESAL as well. So how important is GESAL's activity for your operation and the efficiency of the work you're doing?
Critical. GESAL is a key partner to us. And let me tell you what we did with GESAL, which is probably unique in the history of Ghana. GESAL provides insurance for agriculture-based loans. We were also set up with $70 million, a subsidiary, to provide the same thing across the 4 sectors. What we did, which was unique, is we said to GESAL, why should we be doing agriculture as one of our sectors, and you've been doing agriculture for the last 4 years? Let's sign a compact so that all our agriculture business goes through you. We're still 2 separate companies, but that compact ensures that we're collaborating and we're amplifying our impact. There are too many agencies working as silos today in this country. And together with the CEO, we signed a compact. Why should I build that expertise in agriculture when he's been doing it successfully for 3-4 years? Here's my money. I still have to sign off and all that kind of stuff, but working with him, we're amplifying our impact. Because it's not about who controls the money. It's about who gets the benefit. So GESAL is critical. And all our agricultural work today, we go through GESAL. I don't sign an agricultural deal unless my colleague and mentor, the CEO of GESAL, says it's a good deal.
Okay. Finally, has there been any feedback from your partner finance institutions that has required you to do some changes on your part? I know we've talked about how important and how positive this collaboration has been, but has there been any feedback, maybe need to extend the periods or drop the interest rate a little more or anything like that?
Oh, absolutely. Absolutely. And that's healthy because they push us and spare us. Your rates are too high. It's fixed rates. Because remember, we started off as a mono product, long-term fixed rate. And because of that pressure coming from our partners, we're now going to floating rate products. We're doing everything we can now to reduce our interest rates. So I gave you the example with our D program where we reduced by 500 basis points. We're taking too long to disburse. That's a problem you have everywhere. So now we're looking to automate that process. The due diligence takes too long. We've automated that process. So it's a very healthy relationship. And the day they stop complaining is the day I know I'm in trouble. Yeah.
All right. Your final words. What is the future of DBG like? What are you anticipating, or what would you describe as success, even though it's a vision or something in progress? What would you describe as success, and what does the future look for DBG?
I think success for DBG is on many fronts. But I think the key one would be that we celebrate our 10th year anniversary and we're still dispersing and we're still working and we're still arguing and we're still making a difference. And I think that longevity in itself is the evidence that we're doing things right. Because to achieve that 10 years, we'd have had to have good governance. We'd have had to have been replenished in terms of our capital. And we would have had people then and our stakeholders to feel that to execute their agenda in Ghana, their developmental agenda, whether it be government or whether it be our financial institutions, that we're the best place for them to execute their agenda. So I'm looking forward to a 10-year anniversary, and I hope I'll be invited by whoever's the next CEO. Thank you. Yeah.
All right. Thank you very much, sir. I'm very grateful for your time. Yeah. Thank you so much.
Thank you, Jonas. Thank you. Really enjoyed it. Thank you. Bye.